All right, hey there, good morning, everybody. Christopher Inks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Friday. Oh, what is it? March 12th, 2021. In beautiful, beautiful Bernie, Texas. Guys, I keep telling you, come on out here and visit. It's a great place to visit. But, do it in tandem with checking out San Antonio. You can do San Antonio, Bernie, Kerrville, and Fredericksburg. It's a great little area to check out. Good hill country here. Anyway, good to have you all here. Oh my gosh, excuse me, little something in my throat there. But who's here already? Let's check in and see. We've got Mark checking in pretty excitedly. Good to see you here, Mark. Hank's here. Oscar's here. Who else is showing up? White R21, what's going on, man? Esteban checking in. Hey, buddy. Let me see here. Crypto Magli here as well. Let me see here. All right, what's up, man? Yo. 51 ETH is here as well. Oh my gosh, Spiral Architect, man, my favorite people. Good to see y'all here. Onyx King, Darren's here, man. Good to see you guys. Taylor's here as well. Need to go out but come back to watch. All right, man, we'll check you later, buddy. But anyway, good to have you guys checking in. Everybody else who's too busy to say hi, that's understandable. I appreciate you guys coming in seriously. I mean, if you weren't showing up, there's no reason for me to be doing this, right? And I get it. I rub a lot of people wrong way because the people that I do rub the wrong way are usually very emotional retail traders. It hurts their feelings, for lack of a better way to explain it, to think about something other than what they are emotionally thinking. And, but the truth is, guys, if you want to be in trading for any length of time, for any period of time, you've got to get beyond that. You've got to be open to listening to ideas, especially to people that have been around a really long time and have been through multiple bear markets and in multiple markets. I mean, I think a lot of times retail gets in and they think the minute you say something, where you start talking about something, they think it has to happen like that day. And if it doesn't happen that day, all of a sudden you're an idiot, you're wrong and whatnot. But that's just a lack of experience, guys. And that's why I usually don't give y'all too much a hard time when you come off like that. But if you continue to come off like that, I just block you. I made that comment the other day on Twitter. I don't have time. This internet culture today, people like, oh, well, I deserve to be heard. Well, you can deserve to be heard on your own timeline there. It doesn't mean that I have to continue to entertain your silliness or your lack of, your non-desire to listen or to think beyond what your emotional position is. It's never any personal thing to it, guys. If I ever block you, just understand that's probably the reason why. I don't like to block. I rarely block, but I give sometimes people too much chances there, and it wastes my time. I don't have time. If you're in Discord with especially tier 3, I'm working all day, every day, a long time. So I don't have time to do that. But I do like to engage with people, especially people that don't have the same opinion of me, that, that back and forth, that discussion. You guys are going to find out in trading and in life, man, the more open you are to entertaining thoughts that are different than yours, the more likely you're going to be on the road to getting to some point that's more truthful than anything else. If all you ever do is sit in an echo chamber and just think about what you think of what you want it to be, you can never, how do you know that what you believe is truth? I mean, this is a big philosophical discussion that goes back, hundreds and hundreds of years as far as more modern, philosophy goes. But it really comes down to, you can't know if what you believe is truth if you don't allow somebody else to come in with a competing thought and place their case. But I think even some people have the intention of doing that, but they come off as real jerks. They just come off. And you know what, guys? Let me give you a little helpful life advice here. Just because you're online doesn't mean you should act like a total jerk. Seriously. People judge you by that. And I don't know what's going on so bad in people's lives that they feel the need to, especially people they don't know, just to come off completely as jerks. But you have to understand something is going on in your life that you feel the need to do that. Why? Because normal functioning people who don't have issues, don't come off to other people like that. They don't do that. They're much more understanding, much more willing to converse rather than to just completely call somebody names and whatever right off. So anyway, There we go. That's that. Hey, listen, well, you can come join us at howtotradetowin.com. We put out 4 coupons this week. They were gone in a matter of hours at a significant discount for the 6-month and the 12-month Tier 3 packages that we have. These are already discounted. You have your regular monthly, and then if you buy, say, a quarterly or a biannual or an annual package, each one is going to give you an overall less cost per month. And then I threw out that coupon there with 4 on there for that I think took the price down to less than half of the normal monthly price. So, be following me on Twitter, guys. Be following us over in, the free side of Discord if you're not a member yet. I'm going to do that occasionally. No guarantees when it'll be. But if you'd like to get up and get out of there before that, right here, howtotradetowin.com. Jump on in there, guys. We would absolutely love to have you with us, man. I tell you what, we've got such a great group of traders. I think it's really what's so awesome about what we do is that we've got this awesome group of traders in there. They're so kind and helpful and really smart, man. I can't imagine a better place to be involved with trading. So, there you go. There's my pitch. We'd love to have you there, guys. Let me see here. Data, what's going on? Stuart, what's up, man? I see you there. Let me see. Who else jumped in while I was talking there? Let me see here. Oscar says, if we close today below 58,000, did Bitcoin double top with yesterday's daily close? Let me see here. Yeah, it's always possible right now where we're sitting. It is very much possible. This could be a double top here. And so I brought out this bigger picture here because this is really kind of what we're looking at. And so for me, I think, again, we had this 1, 2, 3, 4, and I believe we're working on a 5. I think that's probably what we've got going on there. But this 4 here, here's the thing, guys. Everybody wants it to go up. I understand that. But let's look at some reality. Seasonally, Bitcoin has had a down month for March. Practically like every March since its existence. I think there might be 1 or 2 in there where it was actually up. But, significantly, most of the time, it was down for the month. So already we think, okay, well, maybe, there won't be. Maybe the month will end lower, right? So it's got to get below 45,000 and some change to end the month below. So what does that mean? Well, it means when we look at what's going on here, I've been talking about this idea of maybe some kind of ABC playing out here. And so that would make sense. This is potentially a flat correction here. You've got, we look at this as an A, a B, and then maybe a 1, 2, 3, 4, 5 as an ending diagonal for C here. So A, B, C, and then you get A, B, and you get a C up here. And so then you got an A, you've got a B, and then you'll have 5 waves down here. Now, when I'm looking at a flat, what am I looking for? So structurally, generally what I look for is what we're seeing here. You have a pretty steep decline, and then you have an advance that takes, quite a bit longer, and then you'll have another steep decline. Okay? So if we actually look at it that way, and this is not saying this is what's going to happen, guys. This is if price continues to go down, if it is, this. So what we're looking at basically here is this, wave A here being basically, 6 days or something like that on this here. Is that 6 days, really? I thought it was longer than that. And then we come up over here. And we say, okay, well, that's wave A. So wave B should be, a good bit longer. Right now at the swing high here, it's about 11 days. So basically, almost 7 days to 12 days here. So basically, we're 1.5 times, the length of time making this move back up than we were on the decline. So this is starting to fit that pattern that we usually look for a flat pattern. So if it comes back down, again, initial target's going to be right down here around where wave A completes. So it's this, this whole 43,000 area again. But, it could continue further down. You've got this high volume node here at around 37.2 to 38,000 or so right here. And then you've got this one here at about, 33.6 or 7 to, 34.2 or so. And those would be also potential targets of a wave C there. But initially, if this is going to be a flat, again, A, B, C here, and then A, B, C here, and then you'd have 5 waves down, you're first going to look right around where wave A finishes. Okay? So we'll see it. We'll see if that happens. If we zip out here a little bit, zoom out here a bit, you might make the argument that this looks similar to this right here. But again, the difference is, remember I said here, we usually look for a flat, we look for a sharp drop, an extended advance, and another sharp drop, right? But what do we have here? We have an extended decline, sharp advance. And so that's opposite of what we're looking for here. So I would say, even though it does look maybe similar here, I'm not sold on it being the same pattern following through, because the structure right here, fast, slow, is opposite here, which was slow, fast. Okay? So if you're thinking it may look like this, it does look, but again, the difference is in how, it drops fast here and then, advances much slower. Unlike here where it declines slowly and then, advances pretty fast there, or at least the same amount of time. And I may have pulled it all the way over here, just mean like this right here. Boom, there. As a matter of fact, if we go ahead and measure this out, it's probably around the same. It looks like we got 13 days there. And then we got 17 days here. So it's a little bit longer, but it's pretty much still within that. It's not like it is here. A significant difference between the fast and the short, the slow there. So, that's just from structural ways that things look. That's just something we look at. Let me see here. Let me kind of catch up with you guys again. Let me see. What's going on, Brian? Good to see you here. Jason, what's up, man? He said, any thoughts on the weekly RSI for Bitcoin? Looking close to... Yeah, the weekly RSI continues playing out. But remember, the longer the time frame, the longer it can stay. The larger the time frame, the longer it can stay oversold, overbought. As far as that goes, if we look at it here, we did have this bearish divergence, which set up this move down that we had, right? And then now we have this hidden bullish divergence here coming off this wave 4 swing low and this swing low up here. So, we do have that. We could see price pushing up a little bit further to finish out, the wave 5 a little bit further up as this comes up. And then overall still have this bearish divergence still building here on the weekly if we do. That would be the way I would look at them. From looking at this here from the weekly, I find it bullish. We moved up here to the R1 and then continued up through it here without retesting pivot. That's usually a pretty bullish sign. Went up through the R2, up to the R3, pulled back, found support on the R2, trying to push back up again. So to me, from a weekly standpoint, this is still looking pretty bullish at the moment. Now that can change. The week here that we're looking at still has a few days left in it before it completes. And we know Bitcoin can make, a sharp drop down. So this, what looks like, bullish continuation here could end up being pretty cruddy here. This weekly opened only at 50,976. So, what is that, 12% from where we're at there? We can do that in, 5 minutes with the way Bitcoin acts sometimes, right? So this could end up being just a doji up here as it retests this resistance here. And then following through the next week to the downside would say, okay, well, that's a reversal coming in. But just from this structure here, again, just looking at pivots, it came in between the pivot and the R1, hit the R1, pulled back a bit, and then rocketed on up through it and through the R2, almost to the R3, pulled back, found support on the R2. It's pushing up again. This is a pretty bullish action right here on the weekly. So you have to watch on that lower time frame and, to get clues that maybe something may be changing. And so we'll talk about the higher up here in a minute, but, I'm just talking about if it does kind of, if the top's in here where we're at, we may have that, that bit of that, what is called there, that flat correction still going on. We may still have that. But, if we go to the monthly, here's the thing about the monthly. Now, I've seen I don't remember who it was. I think I saw somebody online. They were saying, oh, look, everybody said this is such a bearish candle. And then they said, oh, but look, then it went up there. And then they're saying, oh, this is a bearish candle. And then look, it's coming up here. Well, to an extent, they're correct, other than the problem being on the monthly here is that you're getting these large upper wicked candles here on the monthly, one after another. This is a clear clue that there is supply. What you don't have here is what you have here, which is a lot more supply in relation to demand coming in. You can see it in the volume. You can see it in the candle structures here. So yeah, maybe it goes up a little bit higher there, but if you think, oh, this is nothing, this is going up to 100,000 tomorrow, or the end of the year or whatever, without taking into consideration what is literally going on right here, I think you're just acting like an idiot. When you get online and you act all snarky like that. But you should be paying attention, guys. Again, the key to trading is to noticing when the chart starts to look different. This advance up here, this was different here, and then you got to this, and this was bullish. Okay, this is great. So now we've got all these candles going up, and then all of a sudden we get this. So yeah, there's a lot of supply being dumped in the market here. Now that doesn't mean it has to necessarily reverse, but if you don't take it seriously, what it's saying is there's a good possibility it could reverse. So if you don't take that seriously, then you're just blindly bullish and going up and emotional and everything. What happens when it drops down? You think, oh, it's just going to be this. Oh, it's just going to be this. And it keep going. And you'll keep not selling. You'll keep not locking in your profits. Eventually, you'll get to where you're in the red. And then you'll emotionally won't be able to to get out, because then you start thinking to yourself, man, I had all these profits and I was an idiot and I didn't sell. But now I can't possibly sell now because I'm at a loss now. And then it just keeps on going lower and lower. And then finally you sell, or you get liquidated as it hits the reversal. And this is the life cycle of a trader, guys, of a retail trader. This is what usually happens. They fail to pay attention to things like this. And when they do see them, they fail to take them seriously. Now, again, before you go running off there across social media saying, oh, Chris is an idiot, this and that, I didn't say it had to reverse here. As a matter of fact, I specifically said this doesn't mean it necessarily has to reverse. But this is a change in the structure of what's going on this advance, especially over the 3 months previous. This should be notable. You should be paying attention. You should be maybe zooming in a little bit to see what's going on in those lower time frames. And what have we had on the lower time frames? We've had, sideways. Right here. We had sideways right here. We had sideways right here, right on top of it. So, you need to pay attention. You need to be serious about these things. Otherwise, you're just like every other yahoo on crypto Twitter who talks about all the great trades they make, which, most of the time are dubious anyway. But then they fail to show you the bad trades they make, or especially when they were very boisterous about how sure they were about how things were going to go up, and then they lost money. Oh, they'll never show you those. So what I try to do, guys, is I try to just give you this balance. I try to, and for a lot of new traders at first, that's hard, because then it's like, well, tell me what to do. But that isn't trading, guys. As long as you're always worrying for somebody to tell you what to do, you'll never get rich trading. You never will. They may not be there one day. They may be wrong. You don't understand about proper risk management. And even worse, they're completely different than who you are as a trader investor. So what may be a good trade, what may even be a good trade for them, could be one of the worst trades that you could take yourself. There could be much, much, much better trades that you could take. Trading is about learning how to do it, guys. It's not about being out there and having somebody tell you what to do. I'm telling you right now, and I know this, man, because I've been doing this for over 25 years, guys, over a quarter of a century. Everything that's happening here, in terms of retail traders, in crypto especially, is a lot like if you've ever traded a Forex market. It's a lot like Forex. It's all the same thing. It's the high leverage, the insane profits you can make overnight that people tell you about, this whole, get rich overnight kind of idea. They cater to retail traders. They tell you what you want to hear. You want to know why I don't have 5,000 people signed up at Texas West Capital while we're still a pretty small group? Because I don't tell people what they want to hear. I don't ring the buttons that'll make them buy. I tell you the truth. I talk to you realistically about it. And those of you who, if that's really what you want, you're the ones that join. And guys, I'll tell you what, it's got to work because our members stay with us. Our members on average stay well over a year with us. And, I don't know how else to explain that to you. I'm not telling you, hey, you have to come join us. I'm trying to do this to explain what normally happens if you're a new trader coming in and how you get preyed upon by most of these accounts out there, most of the people that they guarantee you these things. They want to be the person that tells you when to buy and sell and all these things. And because that's what you want to hear. You want to hear that if you join them, they're going to tell you exactly where to buy and sell, and they're going to make you rich. Guys, I'm going to tell you what, if somebody was that good that they could do that with you consistently, they'd be charging you a heck of a lot more than what anybody's charging out there. People like me, guys, we're a lot more rare out there because we understand that, what makes you an investor or a trader is different than what makes me an investor or a trader or the guy next to you or the next person over. Which means just because there's something that looks good for me as a trade on there doesn't mean it's going to be the trade you should be taking. It may not be the time frame you need. It may not be the risk level that you're comfortable with. It may not be the time frame that you're, I think it said time frame, but sometime when you're able to do it. This is the reality of trading, guys. So just be aware out there. That's all. We'd love to have you with us, but again, this right now. What I'm saying is not to tell you, oh, we're so much better, but you need to join us. It's just to help you hopefully understand what's going on out there, with these guys. Recently, who was it? The big guys that were on all the YouTube ads forever. Oh my gosh, what were those guys? One guy used to be a gym teacher or something, he said. I can't even remember. They were huge. They were all over it. Anyway, they're in a lot of trouble with the SEC right now because they lied. They were lying a lot. They were telling traders what they wanted to hear, what new retail traders wanted to hear, to the tune of $100 million or whatever into their pockets. But it was a lot of lies. Because human beings are human beings, man. As long as we touch those magic words that really get you, you'll pay. I'm not interested in doing that, guys. So, again, just be careful out there. Whether you're purchasing some kind of assistance or whatever or not, you got to be aware of how they manipulate you and try to get your money on that. Let me see here. Sheepdog, what's going on, man? He says the volume looks different as well on the on what we were talking about here versus here. Yeah. Notice this, a lot more violent on this volume here. Much more subdued volume here. Yeah, definitely different on that right there for sure. Let me see here. Hey, what's going on? Asim Risk there. Finally logged in rather than watching randomly. I'm glad to have you here, buddy. TV Canal is here as well. He says, double top, end of story. We'll see. I'm not convinced yet. We've still got, higher lows and higher highs going into this here. We need to get a move down. Your first thing, guys, listen, right now, if you think this may be a top here, your first thing is it has to get at least below this level right here. This 54,283 here on Coinbase. It's got to at least get below that. Why? Because that's your latest swing low there. If this is a top, then this is a 4 and this is a 5. So you got to get below that 4 right there. Okay? As long as you're above that 4, you can still push higher. It can still subdivide higher, the waves. So you look to get below that. And then for me, if this is an ABC down and an ABC up, you've got to get below this swing low here. This 46,219 and 32 cents. Because if this is an A, a B, and a C is a flat playing out, then for wave B here, this is an A, or this is an A, this is a B, and this is a C. So you've got to get down below wave B here to really add confidence to that idea. And yeah, it's a long way down there. It is. Now, if we're looking at the count here, whether you look at this as an A, a B, or a 1 and a 2, if you look at this as an A, B here, you've got basically a 1, 2, and then a 1, 2, 3, 4, 5. Gives you 3, 4, and 5. So you get a 1, 2, 3, 4, 5. If you look at this as a 1, as a 1, 2, as this is the wave 4 down here, and this is all wave 5 heading up, and it's complete here, so ABC down, it's done. Then you're looking at a 1 expanded flat here for a 2. And then again, you look at the same 1, 2, 3, 4, 5. So this would give you then a 1, 2, 3, 4, 5. Now, if I look at that, this 4 is quite a bit smaller than this 2 here. And so that makes me iffy a bit. But that's how I would see that count going on there right now. So again, it's do we pop up above here or do we drop down below here? That's really what you're looking at right now. And so taking it then, below this level here, then of course takes you back below the R1. So getting above, if you look at just pivots, getting above the R2 and then dropping back below the R1 is usually it's usually a sign of weakness in pivots trading. Because you've advanced up above the R2 and then you fell back, but you didn't find support on the R1, you fell back below it. But it's not just enough to look at the pivot. You got to look at the swing low right by it. So you could actually dip down right just below the R1 and pop back up. But if you're dropping below this swing low here, this 53,025, that makes this decline through the R1 much more significant. So depending on what time frame you're looking at here, I've got this ascending channel here. Here's the other thing. Usually your ABCs will stay within the channel. If you have a 5 count, usually it leaves the channel. So if you've got this going on here, and so usually what you get, is you'll get this 1, you'll get this 2, but then you'll get a 3. And so your 3 usually takes you outside the channel. If price is staying within the channel, many times that usually just means, it's an A, a B, C. So that's something else we look for. Again, it's not a rule, it's a guideline. It's something that we generally look for when we're trading Elliott Wave. So right now we're still within the channel. So, again, I look at it and go, well, it could still be a B. Matter of fact, it doesn't have to stop right here. It could continue going up here. Wave 5 doesn't have to end right here. It could go up a bit higher. You can have an expanded flat. Now, here's the thing. With the expanded flat, why does this work? Because look, guys. Here's your swing high over here. You've got everybody and their grandmother waiting for that breakout, right? So the expanded flat works so well because people jump in and on that breakout, they go up, and then supply hits them hard and takes them right back down. And almost immediately, they're losing money. And then it goes down lower, lower, and you're going to get 5 waves down below where wave A would be here. If it just reverses from here, we're likely looking at prices to target this 43,000, 43,500 area here. But if it continues pushing on up here to maybe 60,000 or something, 61,000 maybe even, well, all of a sudden you're looking at the possibility of an expanded flat, which means then your 5 waves down for C are going to go well below, below this swing low here. But it would still only be this wave 4, guys. And then you'd have a final push up for a wave 5 when it was all said and done. But in either one of these cases, with us only being 12 days into the month, reversing from here or reversing from up here is going to probably take us down to a negative March. And like I said, historically, the way that Bitcoin seasonally trades, March is a down month, historically. So we do that. But everybody and their grandmother's waiting for the breakout here. Everybody's emotionally bullish, thinking it's going to 100,000 off the move here. And, it may. But don't think it absolutely has to. Don't be emotionally bullish in that, because I'm laying out a situation here in which all of a sudden it may not be what you're thinking it may be. Right? I mean, if I look at this count here again, we can go, okay, 1, 2, and we can go 1, 2, 3, 4, and then 1, 2, 3, 4, 5. Right? So then we can get a 1, 2, 3, 4, 5. And that gets us this move up, this expanded flat area. So again, all you have to do is zoom on into this local area, and you need to see, locally here, swing high, swing low. Where does it break off? This is your local range right here. You want to see, does it get rejected here and then drop down below here? Because that's a good sign, for a reversal potentially coming in. If it goes up through here, though, then you could be looking at it heading up towards 60,000 or 61,000 or something like that before it reverses and heads back down. Or again, the third case is it continues going up. And if you're looking here going, but that's so many choices, what does all that mean? Well, it just means if it breaks out above here, you can hold your long. If you were long from down here and you're moving up here, as long as it's staying above this swing low here, or really especially this one right here, this is a bigger one right here, as long as you're staying above that, keep your long. But what you think as a retail trader is, oh my gosh, if it comes back down, what you guys are thinking, I can all but guarantee this. If I say, okay, this is the swing low area here that you need to watch, right? This is the big one. If I say, okay, you know what? You're low, you're long from somewhere here, right? And I say, as long as price is above this swing low, you're good with your long. What you're thinking is, yeah, but Chris, if it drops down here, I understand I should get out there, but man, you just lost me $5,000 of movement, man. That ain't cool. You lost me money. No, I didn't lose you money. I'm telling you, if you want to trade, this is the swing low you're watching right here locally. And if it gets below that, you should be out. Now, if you want to get out before that, that's fine. But then you go, oh, but man, if I get out before that, then what if it goes up and I'm going to lose that money? Well, first of all, the way you're thinking about it's completely wrong. First of all, you should be celebrating that you made whatever profit you made, wherever you got in here, wherever you got out. Because you locked in profit. You didn't know it was going to continue up. Man, but I knew it would. I just knew it would. No, you thought it might. You hoped it would because you're emotionally bullish. There's a difference. And if it goes up, then it gives you all the seller's remorse. But it shouldn't. Because no matter what happens, you guaranteed yourself profit. Nobody ever lost money taking profit. Okay? If instead you waited for it to go up higher, and it didn't, and it kept pulling back lower, and you kept waiting for it to go higher, all of a sudden, if you ever do take profit, you're going to be taking less and less and less. And what happens if you keep holding it, and next thing you know, it drops real quick, and now you're below where you entered? Now you're kicking yourself because you had all this profit here you should have taken at different times. You know you should have taken it, and you didn't. But even instead of saving your account here and just saying, I just need to go ahead and get out, I took a loss, whatever, and get over it, you're like, man, I can't take a loss now. I should have had all this profit. I screwed up. I can't possibly take a loss. And then that starts happening. Guys, I know for a fact this is what goes through your heads. Again, I'm telling you, over 25 years later, I still remember this happening to me. And a lot of people I've talked to throughout the years. It's what we all go through. It's that process. Number one thing is you have to get used to taking profit consistently. Stop trying to hold out until the very end of the trend, especially if you're brand new and you don't really know what you're doing. If you're in profit, take your profit. If you don't take profit when you're in profit, when are you possibly going to take it? All right? Guys, you got to pay attention to what I just said there. There is so much in that. We're talking the trading, guys, what we do on the screen here, this is not the difficult thing. The difficult thing is this up here. You are your own worst enemy when it comes to trading. Trying to get beyond yourself and your own emotional responses, that's the hard part. This is the easy stuff. It really is. This just takes practice. The other takes practice as well, but it's a lot more difficult because we are emotional beings, guys. Okay? Let me see here. Sorry, I didn't mean to get on a tangent there, but, I really want you guys to understand that because, throughout the week I get a lot of the same questions. And they all kind of get to this point, what we're talking about there. What's going on, Riverman? I'm speaking truth. That's what happened to you in when did you say there? In February? Yeah, man. I get it. Again, guys, I don't say anything here. I don't pretend to be what I'm not. I say, I've been through this. Again, I tell you guys, man, I've lost a lot more money than you guys probably ever will. Back when I started. And I had to make a conscious decision to do something different and really just kind of become a student of the market. And what I've learned with studying all these different ways to trade markets is that most of them, pretty much, as long as you're doing them correctly, they'll get you to pretty much the same area, guys. I used to say it a lot more than I do now, but the reality of it is, these different ways to trade are not superior to each other. They all get you where you want to go. You just got to figure out which one makes sense to you and then to get good at it. You don't try it for 3 days and then skip off and say, oh, it didn't work. Of course it didn't work. You did it for 3 days. If you were a baby and you tried to work, and you were crawling around everywhere and you tried to walk just for 3 days and you're like, man, no, it's not working. I'm just going to go back to crawling. I mean, really? Come on, guys. But that's what most traders do. They try something for a day or 3 days or a week or something. They say, oh, it didn't really work. They half-ass their entry into it. They don't, and when they do it, they don't even really put the effort into it. They don't really learn what they're trying to do. You can't do that, guys. I'm telling you right now, whether it's Elliott Wave or Wyckoff or supply and demand or, whatever way it is that you're looking at the markets, GAN, all that stuff, they all will get you to the same place if you do them correctly and you practice and you take the time to really get good at it. It's all it takes is time and practice, guys. Real time, real practice. Mark just spoke to your 2017 2018 self, right? Let me see here. Jordan, what's going on, man? He says, I'll take profit when I have my Lambo paid off and 10 mansions. I love it. Aramis, what's going on, man? He says, I still catch myself doing that. I'm starting to do what Chris told Scott, take profit at 3% for a month. It's still really hard to do, though. Yeah. It's not a fun thing when you purposely limit your profit at first when you're first learning. But one of the best skills you can learn as a trader is to take profit. Nobody talks about this, guys. Think about it. What does everybody online tell you? What do all the gurus tell you to do? They're always like, oh, this magic system or this magic way to trade. This'll make you wealthy in 3 months and whatever. It's what it always is. People rarely talk about the importance of taking profit consistently. Everybody wants to show you how you can ride the trend to the very end. How you can get every last penny out of it. And rarely do those things work. And usually when they do, you're lucky. They certainly aren't consistently profitable. But nobody tells you, listen, take profits consistently. You have to train yourself to do that. There's a couple of benefits from that. One is, the more times you take profit, the more times your capital account grows and the more new trades you start off, right? And so every time you start a new trade after taking profit, you can start with a larger position because you have more capital. You're compounding. So as long as you continue doing that, compounding over time is how you get, I hate to use the term getting rich, but it's how you advance your capital, guys. All right? If you're just buying at one and holding for, months or years or whatever, sure, you can get profit on that. But you'll never get as much profit as you have the potential to get if you're taking profits along the way. If you're just getting in here and taking profit here, if you're just getting in the middle here and taking profit here, if you're just getting in the middle here and taking profit down here, if you're just getting in the middle and taking profit right here, the constant increasing of your capital account combined with, the next trade is just compounding your wealth. But everybody, that comes in basically as retail traders, they just want to get, they want somebody to tell them, listen, you need to buy right here What's this swing low right here? $43,016. You got to buy right there. Buy right now. And then, if this is the top here, you need to sell right here at 58,113 at that very high. Guys, I'm going to tell you right now, stop with the nonsense. It's going to drive you crazy. You're going to be completely stressed out. And you're going to lose a lot of money trying to do that. Zoom out to an hour or 4-hour chart. Give it some time to play out. Give it some time to confirm, and then enter. Listen, if you're trying to long right here, there's no guarantee this is going to happen. I don't care how good your count looks coming down. You could be off on your count. There could be a subdivision going on the waves there. It could go lower. But if you wait for it to move up, wait for it to pull back, and then it goes up again, especially through that swing high there, believe it or not, this entry right here is exponentially safer than this entry down here. Yes, on this particular chart, we've got this here. But there are many, many, many times where this right here, you're going to think it's right here, or you're going to think it's right here, or you're going to think it's right here. And you're going to be wrong consistently. You're going to lose money consistently. You go, oh, but man, I lost all that opportunity there. Well, first of all, if you're just looking at this particular chart this way, okay, yeah, maybe. But for that confidence, you've definitely got money here. And it's not about getting every penny out of it. It's just about you consistently locking in profit, guys, all right? Let me see here. Claudio, what's going on, man? Spoke to your heart. Keep telling the truth. You're awesome. Thank you for your watch for today, man. I'm glad it makes sense, man. One of the most difficult things that I have with what I do is helping retail traders move beyond all the misgivings they have at the beginning. We all have them. We all start the market the same way, guys. Believe it or not, you have the same thoughts everybody else does about the way the market works or the way it should work. But what you find out when you really get in the market, you study them, is that the way you think it works when you first get in is very rarely how it actually does. And as long as you continue to believe that it works the way you think it does when you first come in, you're going to lose a lot more money than you ever have to. But when you get to that point where you go, okay, I'm going to give up what I thought was the way it was and really be open to listening to how things really kind of work, you end up having the chance to make a lot more money, lose a lot less. Because you're not going to make a lot of silly mistakes that retail traders do. Remember, your other time frame traders, these are the big professionals. In general, retail is considered liquidity. They're considered liquidity so that the larger players can move their positions. This is seen quite well if you do like TPO trading, time profit opportunity. If you look at TPO charts like that, you'll see it all the time. And a little bit more different to see here on the candlestick charts, but it's that idea that if you are wet behind the ears retail, if you're a retail that's never changed your way of thinking when you first came in, there's a reason you continue to lose money. So you got to get beyond that and see how do the other time frame traders look at it? What are they looking at? Why are they trading the way they do? That's what you should be doing. All right. I love you, man. Thank you so much, bud. Stuart, what's going on, man? He says, I joined your tier 3 in January. Monty Don on Discord. Oh, man. Okay, that's you. Good to have you, man. He says, the amount of content you get access to is amazing, but for me, the insight and peace of mind I get from listening to Chris has been a revelation. Well, I appreciate that, man. He says, the last 10-minute tangent here has been so impactful to changing my retail mindset. Man, see, I love that, man. Guys, I'm going to be honest. I don't believe in altruism out there. Philosophically, I don't believe altruism is a thing. I think everybody does a thing because they get something out of it. For some people, maybe it's money. For other people, it's recognition. For other people, it's just this feeling of success or whatever. And I'm no different. I don't do what I do here because I'm altruistic, just trying to help you. I am trying to help you. But I'm trying to help you because it makes me feel good to do it. I know that most of y'all listening will never take heed of what I say, but there's a few of y'all that will. And man, when you guys do, and then you send me those messages and those emails and whatnot, and you say, man, Chris, listen, it finally kicked in, what you were saying. And oh my gosh, it's changed my life as far as trading goes. You know, I'm making so much more profit now. I've upped my account 3 times in the last 6 months. You know, just by changing my mindset and really listening to what you're saying about that. Man, you know, I wish I could say it's altruistic, but man, to have y'all tell me that, it makes me feel so amazing. So, you know, it is what it is. It doesn't mean I'm a terrible person. But it does mean that, you know, it's good that people are out there doing things for themselves because we all get to benefit from it. People don't have to be altruistic to better humanity. So, and I don't know, am I bettering humanity? I don't know about that. But, you know, my goal is just anybody that's willing to listen, you know, to help them understand things the way I understand them now and hopefully not go through everything I had to go through at the beginning because it's painful. And most people never recover from it. Most people just give up, think the markets are all a scam and all against them. And, you know, and it's sad because trading is a lot of fun. Trading can provide a great life or, you know, for you, a great additional source of income if you really enjoy what you're doing anyway. So, yeah. What's going on, Block Tech? I appreciate you, buddy. So let me kind of get on here, guys. So yeah, so, you know, here we are so that leaves us with where we are with Bitcoin here. And so right now, you know, things continue to look bullish right now. The first thing I'm looking for though, well, now that we've got this move up, would be, you know, a drop below this swing low. If we get this down and up here and then comes back down, well, now all of a sudden I'm looking at maybe a 1, 2, 3, okay? And so, you know, if we look at this, let me make sure here. You know, just looking at this 1 hour here. Let's see, if that's wave 3, wave 5 is longer. But wave, let me see here, wave 1 wouldn't be. Okay, so this is fine. So it is possible right now that we're seeing this as a 1, 2, they're wrong there. Yeah, as a 1, 2, 3, 4, 5 potentially here. Just looking real quickly here on the 1 hour. But let me zoom in here a bit. Yeah, and then you can get a, you know, maybe an A, B, and then a C up here. As it gets it. Now, it's a pretty deep retracement. And again, retracements that get deep like this always leave me iffy. You know, we've retraced already just above 85.4%. So I'd be iffy on it. You know, this could potentially be an A and a B and then a 1, 2, 3, 4, 5 here, elongated C. We're getting a good sell-off here. That's good, you know, as this potentially being a top. But, you know, again, if this is, this could just be, I think this was the count I gave Discord last night, was something like this. And so this could be, you know, a leading diagonal is a 1 and then a 2, and then a 3 and a 4, and then a 5 here. Or maybe we've got a leading diagonal here. And so this is an A, B, 1, 2, 3, 4, C. So C. So A, B, C for 1, 2, A, B, C for 3, 4, A, B, C for 5. See? And so then you have what, you know, what becomes this other, you know, leading diagonal, this larger leading diagonal here. Expanding, broadening wedge kind of thing going on. Which then gives you this branch out here. So it becomes 1 and 2 then. And so if that's the case, then from right here, what you're going to be looking at as far as the target to the downside goes would be a minimum wave 3 target here of right here at 52,816.73 right here. And then that would give us a, you know, a minimum wave 5 of 51,653. Now, the only thing I really don't like about that, I don't think that count will work out there, is because again, if you're dropping below this ascending channel support, you should pop up, to retest and then head lower. So usually your third wave is the drop below. Your fourth wave is the retracement, retest of support as resistance. And then wave 5 is your next one down. So right now, like I said, the minimum wave 3 would be 52,816 here. But I think logically that we would get it, if this count is a 1-2 here, that we're going to get an overextension on that. And it would head down here and probably, it might, I think, come on down here to around this high volume node right here around 51,000 or so. So then you would get this, basically this 1, 2, 3, 4, and probably a 5 right about that 50,000 area there. Now that either becomes an A or a 1. Because again, if this could be a 1, 2, and this can be a 3, or this can be a 1, 2, and then a 1 of 3. So if this is a 1 of 3, then, this is a 1, this becomes a 2, 3, 4, 5, and then you have your 1, 2, 3, 4, 5 kind of thing point out there. So a lot of possibility on that there. So, but for right now, in order for this to happen, I'm not saying it's definitely going to happen. I'm saying, that there is the potential for it. And what do we need to see to get that? Well, ultimately, we need price to drop below the swing low here. But if you can get a drop maybe below this swing low right here at 56,207, that should increase your confidence in it, being a 1, 2 here and heading down. If not, this goes up and the target still is the ascending channel resistance. So if it goes up above this swing high up here, we're still looking for price to get up here around that 61,000. But in that case, again, even that could just be like an expanded flat. B of an expanded flat and still come down. But it gives you a further upside there. So, I talk about all the intricacies and all the other little things you can think about here. But at the end of the day, at this point, what you're looking for, as I mentioned earlier, was a break out of this or a breakdown out of this box. If it goes up, you're looking up toward the ascending channel resistance, potentially around 61,000, initial target. If it breaks down, well, now you're looking at those targets I was talking about. Get you down there. It's just a little game of weight, guys. But retail traders generally are very, not very patient. It's just a game of weight right now to see what's going on there. Let me see here. Man, I love all the conversation you guys have here, man. Glad to see y'all talking here. Let's see. Not chasing Lambos. That's a great thing. You should be chasing Aston Martins. Just saying. Or even Ferraris. If you want a Lambo, leave the Lambo. Get the Ferrari. I'm just saying. Get a Spider. Anyway. Hey there, Baker. Good to see you, buddy. But yeah, guys. I think I see Hank talking about it in there. The big difference generally between retail and the more professional traders out there is patience. It is one of the most difficult things to learn to do consistently, to be patient. But it will work wonders for your capital account. Most of the time, we get ourselves in problems with trading because we aren't patient. We don't wait for the confirmations. We're scared we might miss out, or we're so anxious to get in because we get bored sitting out that we just enter before we should. And a lot of you're going to notice, guys, if you look back, if you're not doing it, keep a trading journal and look back at it. You'll notice a lot of your entries are going to be emotional. And those are big red flags. Emotions are going to lose you money. But they're hard. They're hard to deal with. But you got to do it. You got to do it. Oh, jeez. Sorry, let me get rid of somebody here. Put user in timeout. There we go. Klaus Media. God, I hate it when people jump on there. See, this is the kind of thing they try to get you in there. Look, hot rumors. INND is shorted, but next week it's going to launch its first ever hearing aid device that's a breakthrough in its industry. You need to buy now. Stop. If you guys are trading based on stuff like that, let this be a wake-up call right there, okay, guys? That is exactly what people do to get you to put money in things. Whether they're trying to sell you something or just get you trying to get into a trade that they're in so they can make money or whatever it is. You can, man, see, here's the thing. I get a lot of people ask me, well, what are you trading now? What are you trading right now? A lot of my trades I don't put out into the open. And I've told Discord members forever and a day, it's because I don't want you trading something just because I'm trading it. If I'm trading it, the trade itself, first of all, may be just good for me in my particular position. Furthermore, whatever I'm trading or I'm investing, whatever, may just be good for me. It may not be something that you need to be in. It doesn't make sense for you to trade it just because I'm trading it. Now, that doesn't mean we don't provide setups. We provide tons of setups, guys, all throughout the year. We do, and very profitable ones. But I don't want you ever trading what I'm trading or what somebody else is trading just because they're trading it. You don't know what their reason for trading it is. I trade things sometimes for tax purposes, which means it's going to completely mess you up in your portfolio if you're trading it. But a lot of people aren't going to tell you this. One, because maybe they don't know, but two, because they don't care, guys. I'm not saying I'm some kind of saint because I care. I'm just saying that, dang it, I can't go out there and be a certain way just to get people to join what we do. That messes me up in the head. I can't do that. So I concentrate on who we have. I know that the people that join us legitimately want to be there for the reasons, most of the time, for the reasons that are the right reasons. And I think that's what makes our particular trading community so amazing. I really do. We don't have issues, guys. I think we've had 2 issues with members, maybe 3 issues in the last 3.5 years. That's it. I don't think anybody else can say that. So, sorry guys. I love bragging on our community, man. Our people are great. I'm telling you, man. I love them. Mark, yeah, you're going to get that FOMO bug, man. It is what it is, man. The truth though is, the more that you note that it's happening and that you don't follow through with it, the easier it becomes to deal with. It never becomes easy per se, but it does become less difficult. Maybe that's the way I should say it, less difficult to deal with. So yeah, you're still going to potentially eventually find you making trades based on FOMO, but hopefully you learn enough on your way to getting to that point where you can at least then protect your position intelligently, even if you weren't smart enough getting into it, the way you did. Jay Quinn, what's going on, buddy? I appreciate it, man. Appreciate it. Let me see here. Briefly look at the TA on the XDAI stake. I'd love to know your opinion. XDAI, let me see here. I don't think I've got anything with that. Oh, I do have something here. What is this from? Oh, wow, this is from last year. Okay, we'll get something new. Yeah, that's from last year. We'll get something new here. We'll talk about TLT junk here in a minute. Let's make a copy here. XDAIT. I think you want USDT here, right? Yeah. What's today? It's 12th? I just do this to keep up with where my charts come in. Oh man, I forgot this had all these. We just want the one. XDAI. See, there we go. Yeah, I'm Polo, huh? God, I remember when I was trading Polo. As a matter of fact, back in 2017, January of 2017, when I first entered crypto, when I started branching out from, at that time I was doing mostly Forex, some equities, but mostly Forex. So the first place my money entered Bitcoin was through Coinbase, but the exchange I actually traded on was Polo. That was back in the day. I think we went from Polo to Bittrex to Binance and Kraken. I think it's how it went with me. Anyway, just a little something about there. I think Hank was saying it looks like a cup and handle. Yeah, I mean, I'm not a big fan, guys. I'm not a big fan with the cup and handle pattern or or the head and shoulders because they're so easy to misidentify. That said, you've got a decent rounding bottom here. You topped out right around where the previous ended. Your pullback shouldn't be too extensive. So if we look at this here, and this is the weekly, by the way. The only thing I don't like about this as a cup and handle is that it pulls back 65%. Usually your cup and handles will be 38.2 to a max of 50. So think of them like a wave 4. Whether it is or not, the other way to look at this is what's great about trading ranges, guys. I'm a big fan of channels and trading ranges. Trading ranges are just channels, and channels are patterns. So if you get a consistent breakout through here, your target should be the height of that range, this channel, this pattern, which is 36.65 or 66 above the point of breakout. That's as simple as it gets right there. Now, locally, sure, this could be a 1, 2, and then, I don't know, this is the weekly. Let me zoom out here a bit, or zoom in a bit. Yeah, if I'm looking at this, I might go 1, 2, and then 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5 will get us a 1, 2, 3, 4, 5. So if y'all didn't follow that, 1, 2, and then this is I would look at this as a 1, 2. This is going to be a 3 and a 4. And then this one right here is going to be your interior for your wave 3 here. So I think, I'm going to measure this out in a minute, but I think just looking at it, this is what I'm probably seeing. This is probably a triangle right here. And 5 right there. So potentially something like this maybe. All right, so now if we measure it out, we go, okay, well, this interior, let's make sure these all make sense. Whoops. So we do a 1, 2 right here. 1, 6, 1, 8 exactly with the 3 there. So yeah, I'm thinking that's probably right. If we take it to this larger one now here, these circle numbers here. This is 3, I'm saying. That is right around the 2, 6, 1, 8, another classic retracement level, so that works for me. The pullback is a little deep. You know, if you go in here, wave 2 here to wave 4, you know, it comes back to the 70.5, but it's remained above this wave 1 here. And that's the real big thing. You know, we have our guidelines for wave 4 retracement, but the rule is wave 4 should not retrace into wave 1, and it does not here. So you're good, I think. So yeah, so if I'm looking at that, excuse me. See if I can do this here. I'm probably looking at 51.07 as that initial target. Maybe the 123 at here, 123.6 here at 58.52 or so for this wave 5, which will then just be this wave 3. And again, you know, you can check that and see that that's going to be well over 1618. So definitely a solid 3 there. So if we get the low, let's just say we get the lower target here. You know, that should pull you back here probably to the 50%. Because of this all right here. You see this whole level right here? So kind of thing right there. So I think it would, you know, it would pull up here, it'd pull back here, and then it'll go up for a wave 5 there. So maybe, you know, again, your wave 4 maybe being there. Wave 5 then, it should be, and again, this is if it's the very, you know, the lowest target there. And then you're looking probably again at, maybe 72 here, maybe 82, almost 83 right here as your targets on that. It'll depend on how the waves subdivide on the way up there. But we're looking at, oh, look at that. 82.6 or whatever, 83, look at that right there at the pattern target. So what I'm looking at there as far as the waves finds, confluence with the target based on the height of that channel there. But that it should probably go a lot higher than that though. If I look at this looks like a 1, 2, 3, 4, 5 here. So yeah, I would probably say this is probably a 1, 2. So ultimately, I'd be looking for this wave parentheses 3, no Roman numeral 3 target. If we look for the 1618 on that, look at it right here. It's right here at 77, which is just below, within $10 of that target. So I think that would probably, end up being your wave 3 there. Your wave 4 should pull back toward the resistance here. Wave 5 should kick up a bit larger there, maybe around 100. Just guesstimating off that real quick. So yeah. Let me see here. Bianca, good to have you check it in. Glad you're liking the conversation going on over there in chat there. Let me see here. How low can the SPX and Qs go? The cubes, I think they're done. I think they may be toast. We'll see how it goes today. We'll look at the stock market in just a minute here, but if the top's in, again, I'm looking for a significant decline. Yeah. Jay, you're very welcome, buddy. Let me see here. So let me go ahead and pull up some stuff here real quick, since you guys are asking about it. Let's see here. If we look at, you said the SPX, right? Well, I've got the we keep the E-minis. We keep track of them a couple of times a day in Discord. And so let's see here. So I'm looking at this. It got. I think it's within 75 cents of that all-time high there. So I'm real iffy on whether or not this is like a 1 and just a really deep 2 or not. For right now, I've got it at that, which means, if I look at this right here, potentially a 1, 2, 1, 2, because I don't think it went far enough to get the 3 on that. Yeah, no, it's because you're looking for a 3 down here at around 38.81. So I think it could either be an ABC or it could be a 1, 2, 1, 2. So what I need to see is, does it stay below this swing low right here? This 39.3725. If it rejects prior to that and then drops below here, I'm looking at this maybe as a 1, 2, 1, 2, working its way down. So in the grand scheme of things, this right here is is 2015 and 16 here. The important area is this, what ends up being consolidation on the other indexes right here. So you've got your buying climax, selling climax, up thrust, spring down here, pushes up. You got these pullbacks, last point of support, show of strength, pullback to the edge of the creek here, and then continuation up. And so, we've already hit this one. My thought is if we're coming down, we're going to come down at least down into, this potential $1,000 or 1,000 point, 1,100 point area, maybe at least. Again, I'm expecting if this is going to come on down here, I'm expecting this to be a grand super cycle top, and we're going to have a lot of downside. That's my expectation. Whether you're looking here, if you're looking at Dow Jones, again, this sideways here from the dot-com bubble, the great financial crisis, I expect at least a deep push into that, but potentially even below it. I expect a clean wash because we're talking about cleansing a market that's been in this particular bull range or this bull trend here for 91 years now. So it's got to cleanse that much malinvestment, which just really kind of really kicked in, strongly there in the 70s after the Bretton Woods, and we went off the gold standard. It really started increasing off of that. So I would expect, a very, very deep drop on that for that. So, yeah. All these things, that's what I'm expecting. Large pullbacks, guys. If it does what I think it's going to do, and, it's really just the same thing I've been talking about, guys. Excuse me. I started talking about the signs showing up back here in in January of 2018 right here. After this, I started talking about all the different signs that were showing up. And as we've progressed, these metrics that we watch have become stretched out further than what they've ever been before. So we've got metrics that we watch that are worse than 2008. They're worse than 2000. They're worse than Black Monday there in 1987, October of 1987. They're worse than the 70s. They're worse even then. We've got some right now that are worse than what they were reading back during right there before the Great Depression. At the height of the market there in 1929. So a lot of things we watch are just at substantially stretched out levels, which just and it's just been increasing as it's been building up here over the last couple of years here. And so, again, basically this looks like a 4 here with, your A, B, C, D, E. And then you got your 5 up here, which was this advanced up we're looking at. Now we're just looking for, for the kind of, this is the top and kind of get back down there. It's the same with the SPX. It's the same with the NASDAQ. It's the same with Dow Jones. They're all kind of at that same point. So that's what I'm looking at that. Yes, Ari. Yes, it'll lead to devastation for a lot of people. It will affect everything. Again, if it's doing this, I think we're looking at something that's much more, that's going to end up a lot closer to a depression than a recession. And again, that has to do with the large cycles, guys. That has to do with, let me show you again. I show you every once in a while here. Dow Jones, because, it's been there forever and a day, is the best one to watch here. We might get another little higher. Looks like we're getting a higher high here, so we're still kind of finishing out this 5 here. That's fine. Let me zoom out here again. Monthly, there we go. That's what I'm looking for. So really, this is the market here. This was the height before the Great Depression. This was 29. And this was the Great Depression here, which had a 90% loss in the market, about that. And then it took from the time it started, from the very high to the next time it actually hit that high, was 9,191 days. 9,191 days. Basically 29 to 54 before it reached that level again. And so, this would be kind of the idea that this is part of that grand super cycle, and this is a top here. We should expect a similar strong, lengthy pullback, and with that pullback, it then takes a great amount of time to get everybody going again, to get people starting to feel more confident about it, starting to go out there and produce and whatnot. We can see right here that it took 1,065 days. So about 3 years just to go from the top there to the bottom. Again, from 29 to 32. 3 years down. but 3 years down, and then of course 20 years or whatever to get back up to that previous high. I'm not saying this has to happen, but I'm saying this has been if you ever wonder why I still look at Bitcoin and I'm not going to be emotionally bullish about it, it's because if this happens, Bitcoin's not going up. Bitcoin is a risk-on asset. It's the riskiest asset out there. It will be the first thing that your larger players that you're so excited about are coming in. It'll be the first thing they take off their books. More likely than not. But either way, it's coming off their books. They're getting out of it because they're not willing to take a big drawdown on that. They're going to take their money out there and put it into dollars because dollars will rise. They'll put it into dollars or investment-grade securities that'll keep value. But they're not going to keep it in Bitcoin as Bitcoin falls. I know y'all go, oh, well, I held while Bitcoin dropped 80% in the last market or something like that. But you did it with what? With $1,000, $10,000, $500, whatever? That's nothing. You're talking about people that have $100 million in there. Do you really think they're going to let that $100 million drop to $20 million? They are not, guys. It's absolutely crazy to think they would. But this big macro picture and everything that's happened since, everything I continue to talk about with the dollar and bonds and everything that's going on, which seemed to suggest that this is the everything bubble popping. This is the credit bubble. Because if that goes, there is no situation that I've been able to figure out yet that Bitcoin continues to rise. Everything takes a hit. Now, what I do believe is, as long as Bitcoin remains a viable asset, in other words, as long as government doesn't get in there and screw with it and screw with your ability to get into it, then I believe Bitcoin will be the first asset out there to come out of that decline. Because what happens is when you have these declines, what happens is everything goes down at first. Gold, silver, precious metals, everything, right? And then before it gets to the bottom, maybe like, if you have it here, then, in this area right here, gold and silver, whatever, will start to kick back up. Well, I think Bitcoin's going to beat them up. I think Bitcoin's going to hit that reversal first. But remember, here's something nobody is telling you online, guys. Bitcoin has never been around in a recession or a depression. So everything else aside, how what you feel about everything else, the reality is that not one of us knows how it will act, how it will perform in that environment. All Bitcoin has ever known is a bull market. It's easy for Bitcoin to go up as the bull market goes on and people become more euphoric and everybody's throwing their money in there and things that they've been doing. It's easy for Bitcoin to go up. What we know is when you get to the top of these large cycles like this, because you say to me, oh, but Chris, look at all the institutional interest, man. And look, they're buying all these stocks, man. It's not going down. No, what we know is at large cycle tops like this, everybody's all in. Your small guys, your big guys, everybody. That's usually the sign. When everybody's excited and everybody's euphoric and everybody thinks it can't possibly go down, that's a big sign it's probably going to go down. Excuse me. Now, how high will it go before then? We don't know. So we continue to play it as it moves, right? Sorry, give me a minute here. Oh, man, that's better. We don't know, guys. But to say, oh, it's not going to go down because it hasn't yet, means that the people that are out there shouting that are probably going to be the ones that lose their money. Because they're going to think it's all just going to be this simple pullback. And it may be a little deep, but it'll be fine. It'll pop right back up. Because that's what it always does. Well, it always does until it doesn't anymore, right? The truth of the matter is, get your stupid laser eyes off your profiles. Stop with the stupid diamond hand comments and all this childish stuff. And look at it and go, my God, the reality is we've never seen Bitcoin in a bad economic market. We don't know how it'll do. My expectation now, as I've not hidden anything with you guys, my expectation is that I'm going to short it down when it does, and then I'm going to buy as much as I possibly can get my hands on as we near the bottom. As long as nothing happens along the way that makes it look like it's pretty much not going to be around. Talking about government, involvement or something that really just kills it off. Because the truth of the matter is, because we don't know how it will do, we don't know if it'll become nothing more than Beanie Babies. And yes, guys, contrary to what you want to believe, contrary to what people are trying to sell you online, that's a very real possibility. Again, I told you, I don't have, 5,000 members at TWC because I'm honest with you. I don't blow smoke up your rear end. I talk about the things that nobody else is either willing or wants to talk about, either that they know or that they want to talk about, because they're scared that if they say it, people aren't going to buy their products. It is what it is. But me saying this, again, it's not to tell you that it has to go down, or that if it does, that it's going to do so badly or whatever. This is me saying we honestly don't know. And if you don't know, then you have to prepare yourself for the usual outcome. And if you have a recession or something kicking in, everything does poorly at first. So you should expect a strong move down in Bitcoin, because Bitcoin's so much more illiquid. So you should expect to take a harder hit there at first. But the other thing to keep in mind is, because it's still new, because it's never been through a full cycle, a full economic cycle, we don't know if it's going to be around when it's done. I hope it is. I plan to buy a ton, make a stupid amount of money on the way back up. But if it's not, I'm not going to lose my life savings thinking, wanting it to go up, or being, emotionally bullish about it. If I did that, I wouldn't be where I am today, guys. Got to be smart about it. Do I have a preferred platform or methodology for sure? Yeah, it just depends on where you are. Femix. I like Femix, man. I've talked to the guys there, and those of you that have been following me around a long time, I rarely push any kind of anything. But, if you can use Femix, I like Femix. Stateside, if you're a U.S. resident, you don't want to use a VPN and all other fun stuff, Kraken's where you would short. You can short up to five times leverage on many of them, Bitcoin, Ethereum, stuff like that. Some of them only 3 times leverage, or 2 times leverage, depending on how liquid the asset is. But Kraken kind of becomes your only game in town, really. At least on leverage. Bexy, BEAXY, they were something we looked at for a while. They had issues, but they seem to have changed everything up. They shook out all the bad stuff, and they got a lot of things going on. So their volume really isn't there, though. So for me personally, the volume is an issue. But if you're a smaller trader, it may be a viable alternative for you in the U.S. But yeah, as far as fully legit, U.S. that allow leverage, Kraken's kind of where it's at. Like I said, if you can use Femix, I would definitely say Femix. I love Femix. Their engine's incredibly fast. They don't tend to have, the same amount that, of this problems that everybody else has. I think still, exchanges are going to have issues, but I think Femix had a lot less issues. And plus Femix, you can even, if you just want to do the spot market, you can do you can pay a monthly fee, like something like $8 or $9 a month, and you can trade as much spot as you want. So if you trade a lot of spot, Bitcoin, other things God, that would be the way to do it. You'd save so much money on fees. But if you're going to trade their contracts, you can't do it that way. But yeah. Oh yeah, I guess you can do Coinbase. God, see, I keep forgetting about Coinbase. I'm just such not a fan of them. I'm having an issue with Coinbase right now. We use them as our crypto processor for payments for TWC. Man, we run a ridiculous amount of money through them every year. Not just them with the business, but me personally. I've been waiting a week for a freaking response for an issue that I've had. I can't even pull out our payments that are in crypto right now. And so I'm so frustrated with Coinbase. I've never had a problem sending money to Coinbase or pulling money out of Coinbase. I've done it with the straight up check, checking account. I've done it as a wire. I've never had an issue. It's always been there like the next day. So I can say that about them. I can say that from my experience over the last few years with them. But right now I'm having the issue I said, and I'm not happy with it at all. But thank you for reminding me, Hank, about Coinbase. I forgot about them. Ace and Risk, man, I appreciate it. Thank you, sir. Thank you for saying that, man. And Hank as well. I appreciate you guys. Femix is Phemix, yeah. If you're in Discord with us, we do have a link that you can use there. TWC gets a kickback on that. We use that to, of course, just continue to add to what we do. Again, those who've been in Discord with us for a while, we continue to add what you get there. So, if any of y'all ever use Phemix, it might be EX instead of IX. But anyway, yeah, if any of y'all ever use it, ask us for the link so we can do that there, especially if you're in Discord with us. Because any of that money that comes in through there, again, we just put back into the business to just kind of keep growing the resources that we add there and everything. So, yeah. Let me see. Yeah, no, it's the way, Mark, if you're asking about the withdrawal we have, so Coinbase has their Coinbase, they have their Coinbase Pro, and then if you use them as a payment processor, they have Coinbase Commerce. And with Coinbase Commerce, you have to withdraw. It's so crazy, man. You have to withdraw the money there and send it to your other account in order to access it. And so we've got a ton of USDC in there, which is on the Ethereum chain, which high gas prices. It's because we only have a little bit of Ethereum in there. And so we had to wait for for the Ethereum gas prices to drop, and it did last week. Had more than enough in there, well more than enough to complete the transaction. And it kept telling us it was erroring. Tried it for days and days, wouldn't do it. Sent an email, still haven't heard anything from Coinbase about it. It's really bad business when you've got companies running, significant sums through you, and your customer service goes a week without answering back. It's just stupid, if you ask me, as a business owner. I get behind a little bit sometimes too, because where we are in our growth. We're about to hit that next level, so it means I have to do a lot more work, which sometimes makes me a little bit slower responding. But in their case, they're trying to do, they're getting out, going public, and all this, and they make ridiculous amounts of money. They should. I'm jaded right now with them, so. Oh, by the way, you can use Binance.us if you want as well, if you're in a state that can use it. In Texas, we still can't use it. But many of the U.S. states, if you're in one of the many U.S. states that can use it, Binance.us is another option as well. So I completely forgot about that one as well. Yeah, anyway. So there's that. Let me see here. So if we're looking at this, guys, we always kind of take a look at gold here. So gold. I used to love Binance. When we were able to access Binance, man, that was my go-to, man. I love that place. Now it's not so much. Oh, by the way, you could use Bittrex if you're U.S. as well. Bittrex.com there. You can use them as well if you're U.S. They've got a lot of the older coins. They've got a lot of them. They've got new ones as well, but they've got a lot of the old ones because they've been around a while. Like I said, when we first got it, we started at Polonix. We did Polo there for probably about the summer of 17, I guess, and then we switched to keep want to say there was something in between, but I think we just switched to Bittrex after that. And then hung around Bittrex until Binance opened, and we joined Binance, and then also Kraken after that. Checking them all out. Yeah, liquidity on Bittrex. Again, Bittrex was huge, man. Summer of 2007, up until Binance kind of came in there, Bittrex was the thing, man. Now, again, a little bit low on their volume there. But I haven't had any issues trading anything on there, so there's that. That's always, good at least. Oh, man, Digitcoin back in 17. I remember that. We ran that thing up. I think one of the best buys we had on that was buying it around 110 or 90, somewhere right around there. And then we ran that up to, what did it get up to? Did it get up to 600 or 700 or something? Maybe it was another one I was thinking of. Yeah, that was a lot of fun. Mark, you're in no man's land, Canada? Oh, man. So anyway, yeah. So gold locally here. If I look at this, I can make an argument for a 1, 2, 3, 4, 5 here. And then an A, B, C. And here on the 1 hour, we're about to top out and overbought. And we've retraced now. Almost just about 61.8. So, I mean, this area here would make a good, reversal there. If it does reverse from this area and you're interested in shorting some gold, which, by the way, guys, you can do on Femix. Femix, you can trade gold there. Let me see here. It's right around that area. You'd be looking for a wave 3, a local wave 3 around 1654, and then a wave 5 around 1638. You can see that kind of aligns with the 1 hour S2 pivot here, which will close at the end of today. But it gets you a good area down there toward that area if it reverses from here. Bigger picture gold, guys. Again, nothing's changed. As a matter of fact, things are just becoming more and more likely to follow through. Kind of get this out of this large time frame here. Oh my gosh. Come on. There we go. And so I'm still kind of looking at this expanded flat. Those of you that have been with us since 2017, this is pretty much the same count. The only thing we've done originally, I expect to just be a regular flat. And now, or not even a regular flat. I was looking at it being more of a zigzag. So 5 down, 3 up, 5 down. It pushed up here to get an expanded flat area. And so still looking for it to get down here probably around, 900, 850, around this area. And so, again, with silver, man, before we talk about silver here, you can see right here, we're dipping below the descending channel support here right now. We're below the pivot. We've dropped through the pivot, so usually it means we at least get a move down to the S1. So I think you should at least be looking at a move down here toward, 1535 or so. But yeah, kind of looking at that. But if you look at silver, everybody thinks silver's got this big open move. I don't think so. I still think silver's going down. Let's see here again, looking at locally here. It looks like we've got an A, a B, and then a 1, 2, 3, 4, 5. And then potentially 1, 2, 3, 4, 5 here. So it just looks like it's doing like a, this is wave 2, and then this is wave 1 of 3. Wave 1, wave 2, going there for wave 3. So at minimum target of around $23.06 there. Minimum wave 5 at around $22.24. But again, zooming out here, this is that big count coming way off here. Very big chart. And looking for the pull back down to a new low here, below this low. Below $11.64. Below $10. One of the things we often look at when it comes to silver and gold is Let me bring this in here. There it is real quick. There you go. So the blue line here is gold. And make sure that's in log there. See log here, yep. And then log here, yep, okay. So with gold, what you tend to see is silver leads, okay? So in here, you'll see silver topped out before gold and came down, and gold followed after it, right? And so then what we look at here is gold made a higher high, but silver does not have a higher high. So the idea that gold's going to continue up doesn't make a lot of sense, because usually silver leads gold. And so as long as silver remains below that all-time high there, it suggests that gold is printing that expanded flat. Now, obviously, if silver were to continue up and eventually get up there, then, it is what it is. But right now, looking at it, that's one of those big other factors that we usually look at when we're trying to look at gold and what's going on with gold. So we'll see how this all plays out. Either way, I think we're going to have some significant bit of pullback first before it goes any higher. But we will see how that plays out. But that's still the same. There's no reason for me to change that right now with that. What's going on, Sir Ho? Good to see you. Let me see. Can you do FTX in the U.S.? You know what? I think so, Hank. I think there's an FTX U.S., but like Binance U.S., it's limited in the number of cryptos it's listed. I forgot about that one as well. Just because, again, I think the last time I looked, the availability of coins was really small, and I'm not even sure that the volume was all that great. Yeah, the FTX, the other FTX, the international FTX is great. A lot on that, sure. Yeah, let me see here. Crypto Malgla, yes, sir. I'm sorry, man. I'm so far behind on everything with that, again, with the whole 4 days without power there we had, and then with the move here. But yeah, I'm still working on getting the alerts for hot takes. My problem right now is the diagonal alerts. That same issue that's on TradingView when you're using log. The alerts don't generally work as well. So I'm trying to look at a better way of implementing maybe horizontal alerts more, consistently there. And then that way that'll make it an easy thing. And then I've got a delivery system I'm looking at that should... I might create another channel in Discord where we can just put the updates for those hot takes in there, so it doesn't muddle up the initial charts or your discussion channels. So yeah, that's the goal right now. So yeah, you're so fired up to get swing trading after today's session, Mark. I'm glad to have you fired up, buddy. Let me see here. Real quick, let me kind of see what else I need to do here. Running out of time. DXY, man. So we didn't really look at the DXY here. Okay, DXY. Here we go. So, again, guys, at the end of the day, everything that's denominated in dollars bows down to what's happening with the DXY. Period. Because remember, necessarily, if the value of the dollar rises, then that means things that are denominated in dollars will take less dollars to purchase them, right? If the dollar value is here and the price of a thing is here, okay. If the value of the dollar rises, the dollar becomes more valuable. It's going to take less of them to buy this thing. Its value is going to necessarily drop. So that's why watching the dollar is so important. And you know what? This romanticizing of the death of the dollar is just silliness. It happens all the time with people who don't understand monetary economics, stuff like that. The dollar's not going anywhere anytime soon, guys. It's not hyperinflating anytime soon. There's so many things wrong with so many of these arguments, okay? But what I'm looking at right now for the dollar, with the move above this swing high over here in the beginning of February, the move here recently above that, that's added a lot of confidence to the idea that the bottom may be in back here in January. So our next step is we need price to get above this wave 4 up here at 94.739. Until it does that, it's still it's still subject to potentially rolling over and making one new lower low. Hank wants those mid 80s. It may happen. But until it does, right now I think locally gosh, man, my throat is dry. We just kind of keep looking at what's going on here locally. And so locally, I think we may have a 1, 2, and then we've got this 1, 2, 1, 2 coming out of here. I think. It's interesting that this found support right on wave 1 here. So I can see a case where maybe we got a 1, 2, and then we have a 1, 2, 3, 4, 5. So it'll give us a 1, 2, and then a 1, 2 heading up there. But in either case, with that account we have here, we're looking for price to head higher. And as long as price continues heading higher overall in this larger system here, it's going to be hard for Bitcoin to continue to head higher because Bitcoin, BTC, USD, denominated in dollars here. Again, as the dollar rises, it puts downward price pressure, downward valuation on Bitcoin. So not only does Bitcoin have to come up with enough demand to, first of all, overcome the supply that's coming in, then second of all, enough extra above that just to mitigate the effects of the downward value pressure on it, price pressure by the rising dollar. But then it has to have even more demand coming in beyond all that just to get it going up in face of the dollar going up as well. And that's pretty significant. I'm not saying it can't be done, but generally as long as the dollar's going up, we should overall expect Bitcoin to head down. That doesn't mean they can't both go up at time to time at the same time. But what it means is you're zooming out to the larger daily picture or something like that and kind of comparing that is what you're looking at. Let's see here. Let's see. So, again, you're going to have this continued pressure on Bitcoin, from a rising dollar. And if we look at the dollar, remember, if we zoom out there, this, let me take everything else off here. I mean, this is what we have. We have this low kicks in. And so this low kicks in right here where you have all this resistance and support here. It's this area of as you can see, look across here, your resistance and support. That's where you are. And so this pullback here has just pulled back into the most latest, into the latest consolidation right in that resistance support area. So it makes a lot of sense to pop up off there and continue up. Now, will it or not, we'll find out. Again, we need to make it above, this swing high up here. Now, you can also notice by getting above this swing high, again, this 94.742, that'll take price above the weekly pivot. And when you come up from the bottom through the pivot, that's a bullish sign. When you're trading pivots, it's a bullish sign. You can also, if you're interested, look at this type of thing here. Basically, it's just a wedge here. And, of course, we had this wedge here as well. Oops. So, wedges, potentially signaling a move up on that there. So, if you're into those kind of patterns and things, there's that to look at as well. But we need to absolutely get above the 94.742. We got to get above that. If we're getting above that, to me, you have no argument for it going back below that January swing low right now. And so, one thing that you noticed, hopefully you did, we talked about it, was, as we got to this low here, lower lows, we had bullish divergence here on the weekly RSI. So that was a good clue that, You could go long. If you want to trade dollar futures, you can do that with the CME or CBOT. One of those two. They do have dollar futures. I think it's the CME. So you can, you can always trade the dollar itself there. The other way to trade it is against, is in the Forex market, right? So the DXY is a value, that 91 point whatever. It's made up of a combination of weighted FX pairs. So the Euro USD makes up the most weight of the DXY's value. It makes up about 56% of the DXY's value. The second largest is the USD yen, which makes up about 11%. The USD Swiss franc makes up about 4.6%. And so you have that, there's a few of them in there that make up a total of 100% of that value. So generally, your Euro USD chart, not all the time, but generally, it's going to look mirror image to the DXY. So if we go up here and add it in here, and you can see that the DXY and what's it called here, the Euro USD, are just pretty much almost mirror opposites, almost. Not completely. So if you want to be long the dollar, what you can do is you can short the euro against the dollar with a Forex broker. You can short the yen against the dollar. Or I guess you would long the dollar against the yen, the USD yen. You can long the dollar against the Swiss franc. But, your biggest movement generally is going to be either in your Euro USD or USD yen on that. So that's a way that you can get exposure to an increasing dollar without, actually having to just trade dollar futures. You can actually trade spot directly with your Forex broker. Let me see here. So anyway, just something to keep in mind here, again, so, this is the bigger chart here. What's potentially going on here, with the Euro USD here, or the, USD, the DXY here. Again, I said the USD yen as well. Let's see here. USD yen has been a ridiculous moneymaker. This has been the most consistent USD performer right here. And look at that. This has been absolutely beautiful. This run up here. So off this bottom here, this thing has gone up now. We've been following this up for for 661 pips so far since January. So absolutely awesome run, beautiful run along the way. But this has been a great one. This is one of those ones we update a few times a day as well, whether you're tier 1 or tier 2 or tier 3. You get access to that. So, kind of looking at this continuing to play out here as it goes out. Oil, man, what's going on? I know people people here in Texas are getting pretty upset about oil. Oil's price kind of continues to rise here. Oil, we're just kind of coming up through here. Maybe potentially just 5 of 3 here. All right, this looks like maybe a 1-2. So we want to see if we can get this rejection and continuation down below the swing low here at 63.13. If we can do that, that's a pretty good sign, but we still want to see it get below wave 4 here at 59.24, which gets us below the pivot, which is a really good sign that we're probably headed down at that point. And then, of course, getting through the larger wave 4s here at 57.41 and 46.16, trying to get down there. basically wave 4 should probably come in right around this this kind of 46 area at least. But at least there, likely down here at around 33, 34. This large 4, this is a 3, this is a 4, and this would potentially be a 5. So what you look for is this 4 coming back. This 4 of the larger degree should pull back to 4 of the lesser degree to this area here. So that's what we're going to look for. Now there is this HVN right here around $40, 40 and a half. So you have to be careful of that, but yeah, potentially coming up there. So I think we're going to get a reprieve for oil prices here pretty soon, it looks like, if this is done or near done here. And so this should take a few months to kind of come on down. And you should see your oil prices here in the U.S. anyway, dropping a bit while it does that. So yeah. Let's see here. Yeah, the cable, the Great British Pound against the USD. We actually got right there at the top. Let me see here. I got to get ready to go here, guys. It's about 1 o'clock, but let me pop this up here real quick. If you've asked me a question, you're in Discord, and I wasn't able to answer it during this discussion here, man, just hit me up there in Discord. You know, tag me in Discord, and I'll be sure to answer it. Let me see here. I think this was the chart, right? No, it was the most recent chart. It's not that one. Oh my gosh, the problem when you have so many of these charts in here. I'm trying to find the one that has that most recent count. I don't think it was this. No, this was right before. It was the one after this. Oh, let me see. Let me pull this in and see what the heck's going on there. Nope, that's not anything helpful. I might just look it up in Discord and pop it over here real quick. Oh, wait, there's a 224 update. There's a 210 update. Okay. Maybe it's that one. Nope. God dog it. Where was the last one I did? Give me a minute here, guys. Sorry about that. Let me see. The last thing I posted in there, what I post? Oh my gosh. Excuse me. Yeah, I can't even find it in here real quick. God dog it. I hate it when this happens. I think it was right in our hot takes. Let me look at the hot takes there real quick. I'm sorry, guys. Give me just one moment here. Let's see. Here we go. Yeah, that was the one. So we posted this on what, 2/24? Yeah. So I posted this on the 24th of February. Man, that was a great initial drop there. Thing off the high there. That's 467 pips off that high. That was a beautiful drop. Let me see here. If we're zooming in here real quick. 1, 2, 3, 4. See, it looks to me like a 1, 2, 3, 4 is expanded flat. 5. Then maybe an A and a B and a C here. Then heading back down. Let's see here, what kind of retrace do we get on that? Yeah, we got 50%, almost to the tick there. Dropping down below swing low here. Oh, right around 138, 1.3868 or so. Should really kind of confirm that you headed down there. In that case, you could potentially short on down here toward 1.32468 as a wave 3. 1, 2, 3. You get a 4 back up here to about 1.35364. And then you get your minimum 5 down here, 1.30679. But I think you're going to have an overextension of wave 3 in there, because you should get 5 waves down toward this wave 4 here. So you should end up closer down here, 1.28 or so at least, rather than up here at 1.30679 kind of area. So yeah. I'm not sure. What are you asking here? Because the first data cable under the ocean was between... Oh, God. But yeah, so watching, again, this just kind of goes in. Everything, when you're looking at the DXY and you say, okay, is the DXY really reversed or not? When you look at the Euro USD, when you look at the USD Yen, when you look at USD Swiss franc, when you look at the Great British Pound against the USD, when you look at the Australian dollar against the buck, what you see is they all appear to have reversed. And when you have that kind of confluence across the board with your USD pairs, usually it's a good indication that that the USD is making that reversal. But again, still with the DXY, we want to see it get above that 94.742 to really kind of feel like, okay, the bottom's probably in. Until then, I think it's still susceptible to maybe being some large correction before one more push down. So yeah. Onyx King, what's up, man? You're still short since that update? Man, that was that was such a timely update, man. I think somebody requested, I think is what it was, because we were looking at it previously, and that was just, I said, man, that looks like 5, let's go down. And man, right away, lots of pips, man, lots of money to be made on that decline. So feeling pretty good about it. Let me see here. Daily we popped up out of oversold, but we're starting to curl back over and come down again potentially. RSI still has a lot of room to roll there. The most bullish thing I can say right now is currently with the daily candle, it dipped below the pivot, but it's above the pivot right now. So the most bullish thing I could say about this is you get a close above the pivot maybe at the end of today, but there is a bearish engulfing. So if the next daily candle, when the market opens next week, is, if this closes like this, bearish engulfing, and the next daily candle is another supply candle that shows us continuation, that would suggest the reversal is probably happening here. And the reversal here makes a lot of sense. Again, this is where you got your candle split here, you got them split here, resistance, 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 and then again resistance again. So this is a significant area right here. So to get reversal there, 50% retracement would make sense on that. I'm not so emotionally bullish on that Euro USD there. I'm going to get ready to go here in a minute, guys, but since Hank's bringing it up and what we were looking at earlier, hey, Mark, man, I appreciate you, buddy. Right now, I'm looking at this as potentially a 1-2, 1-2. Could be a 1-2-3 or a ABC. Sure. There is. It's if you look at it, there could potentially just be an ABC there. Excuse me. But let me see here if I can find it. The two ways I'm kind of looking at this. One is this 1-2, 1-2 right now. And the fact that we're getting rejected right here where this support was is significant. So again, if we get this continued to follow down here below this recent swing low, that really adds a lot to confidence there. But the other count we could potentially see in here, I don't like it as much because the wave 4 is really out of proportion to wave 2, but you could have like a 1, 2, 3, 4 here, and then a 5. Which would potentially even give you, higher up here potentially. This could be a 1 and this could be a 2. But again, I'm not really such a fan of this short wave 4 compared to how large this wave 2 is. Short wave 4 there. So I think I like it better as a 1-2, 1-2, especially, like I said, with this kind of getting rejected right here prior to where it was found support. Yeah. You hope it goes down. Way too many USDs you need to convert to euro. Oh, man. Yeah. I mean, it could be. We'll see what happens. Like I said, the DXY is showing something that it wants to, but we still need it to go beyond that level. 1 hour here on the Euro USD. We're almost topped out and overbought. We're below the 1 hour pivot, the 4 hour pivot. 4 hour, it's trying to curl up prior to actually getting into oversold. Usually, it's going to go all the way down to oversold. So this seems kind of reactionary here. Daily might give you a better case. Man, but, like I said, daily, here on the daily, you're still above the S1 pivot right now. So that's kind of bullish there. But, it was just a little bounce on oversold here, and that's not usually a good sign for bullishness. I mean, it happens occasionally, but usually, you're going to deeper push into the oversold on RSI. So, so if I look at that, I go, okay, well, it's still in this bearish market structure here. You still got a high, a low, a lower high, a lower low. So at least as RSI goes, it's still bearish market structure there. And Stochk RSI has a lot of room to fall back down now. So, but from the candles position right now, this is a more bullish candle for sure. You're getting a bit of a wick on that. We'll see how the day ends. Got another couple hours till it's over, but a lot of traders going home already. The advance up here, less and less volume. But the candle spreads are pretty all right. So kind of iffy at the moment if it's got further go up or not. But like I said, could potentially have 5 down here and then be working on an ABC up. So, yeah. Anyway, guys, all right, I've got to go. We'll take a look at all this stuff. What I want you guys to understand, though, especially when we're looking here, is just to understand that a lot of online, they're going to get you guys to be very emotionally bullish. And a lot of it is because they are as well. But a lot of it is also because they've got something they sell you and they need you to be bullish about it, okay? The goal is to let everybody else be bullish emotionally or bearish emotionally, and you just to let them be the liquidity. Let them be your liquidity. That's the goal, guys. Make note of when you may be feeling more emotional. And then, step back a little bit and look at what's going on. Look and see what may be triggering you. Like I said, guys, keeping a trading journal, especially at first, is invaluable. All right? It'll help you when you look back on it, it'll help you go, okay, I was being emotional here. And you'll start to notice these things for yourself, which will help you with your trading so much. All right? Anyway, guys, I have really run over. I've got to get out of here. So, as always, thank you so much for joining in. A lot of great questions, a lot of great conversation going on. I love it. But if you'd like to join us, we would absolutely love to have you. And again, you can do so here at howtotradetowin.com. We finally got everything automated. So when you log in or when you create your account, guys, you purchase your membership, log into your account. There will be a list of links here on the left side. At the top of them, the first one says update Discord username. Click on that. And then you need to put your Discord username, the #, and the 4-digit descriptor. Easiest way to do that is when you're looking at Discord, on the left-hand side, go all the way down to the bottom where it has your picture and then it has your name and all that, and just click on that. It'll automatically copy it. Paste that into that box, and when you do that, it'll automatically, immediately give you access to Discord. So, to the paid side of Discord, whatever your membership level that you got there. So just make sure you guys do that. Spend a good bit of money on that to get that done, so that way it would be easier for y'all. If anything ever happens, you're a paid member, and anything ever happens, and you lose access, first thing to do is go there and put in your thing like that. If you're still not getting access, then you can contact myself or Adam Harris, and we'll help you figure out what's going on. But the goal is to hopefully get you guys a lot easier without, us getting involved to get you in and out of Discord and all that. So anyway. All right. Hey, Crumb Snatch, glad to have you here, buddy. You have a great weekend, all right? YouTube Data, Hank, Crypto Mowgli, Onyx King, all of you guys. Mark, thank you guys so much for being a part of this. Remember, the only thing you control in the market is how much you lose. That's it. Rule number 1, protect your capital. Rule number 2, grow your capital, okay? If you can't protect it, you won't have anything left to increase or to grow, okay? So you need to take risk management seriously. You guys have a great weekend. If you're in Discord, I'll see you guys over there in just a minute. Take care.